Hello friends, this is Martin from Secret, the channel for learning about trading and investing. Welcome to another new episode of Markets Tomorrow, the daily market analysis show where we look at how the market performed during the day and how we can look forward for a better trade tomorrow. Remember, this is for February 1st, Tuesday, 2022. So pre-market analysis, as usual, we would be analyzing it for the next day, right? We'll be doing it based on all of these parameters that you see on the left side. That will be on the charts basically, and in addition you would have analysis on all these parameters that is on the right side as well, and we'll also have some action levels also. So let's look at the price pattern. What happens here? Clearly a gap up but a small body green close. Here also it was a gap up from the close if you see, but it could not it got engulfed with the previous bearish candle. It's a hammer, right? That's what Bank Nifty is clearly showing. So we were seeing that this was the previous resistance just not to be support, and the bounce was expected and anticipated yesterday, and it happened in Nifty. But the Bank Nifty also it happened, but the previous candle bearish was too big that it could not close above that. Basically the resistance was it faced the resistance at 17,400 in Nifty and 38,000 on the Bank Nifty. That's exactly what happened. Let's get into a little more details. So it is a gap of 1.4% up. That's 238 points was gained today as compared to the previous close, and it is facing the resistance at the 50 DMA, right? And remember, tomorrow is budget day, so one day ahead we have a green close. It seems to be a gap up bounce, and Bank Nifty did not show too much of strength today, right? It closed just 0.76% up, and it closed red because it closed lower than the opening price and formed an inside bar like we have seen, right? That is engulfed by the previous candle. That indicates a consolidation only when inside bar normally. This is clear bullishness that you see. It's a clear gap up, pro gap you can say. Intraday, this is what happened. After the gap up, nothing much happened. It faced the resistance, attempted 3 times at trying to take away the 17,400, but failed miserably, and then settled almost were near to, not much ahead of where it had kept up and opened, right? Bank Nifty's case, it moved up, but it was facing the resistance at the, you can see that here also it's a gap up is there, but a big dip happened which gave up all the gap up gains completely, and then it recovered, but again faced resistance at 8%. That's what happened in intraday price action, right? That's what I explained. The Bank Nifty was not too much bullish today, but still closed gaining few points from the previous day's close, but the red candle, right? Resistance levels 38,000, right? So Bollinger Bands is interesting. It's showing contraction of the Bank Nifty. Look at the Bollinger Bands. Bank Nifty is clearly showing that there is less volatility that is going to be there, right? The range is pretty much 39,000 and probably 37,000. That's it. So that is a small range, but look at the range for the Nifty. It's the distance from the median to the upper band. It's in lower band. Clearly says that it is going to be highly volatile, but consolidation because it is bend and not rising, right? Highly volatile consolidation is what Bank Nifty is telling, and also not that bullish because it's far away from the median, the price. But Bank Nifty, it's contracting and squeezing, right? And it's showing bullishness because it's closed over the median also. That's what. Make a note of the support resistance levels. 17,400 seems to be the resistance upside, and after that, if that's clear, 7,500 to 7,600 Fibonacci 23 retracement level is where the resistance will be. Then 17,800, 850, and then 17,950, 18,000 would be the next resistance and upside. Similarly, downside 17,200, 17,300 would be support, and below that 17,000 again comes in the support. If that's broken, then 16,800 to 6,900 Fibonacci 38 zone is also going to be a good support downside. Similarly, Bank Nifty resistance on the upside is 38,000. Second one is 38,500. Third one is 39,000. Similarly, below 37,400 is the Fibonacci 23 support. If that breaches, then you have 37,000. That's also in support zone. and then 36, 336, 700, Fibonacci 38 retracement levels are going to be the next support zone. So that's the support and resistance levels for tomorrow. Momentum is today Nifty has gone to sideways from the bearishness. Bank Nifty continued to be the bearishness in the short term daily. Right, there is a divergence which has met its targets and Nifty bounced up on the Nifty. There is no divergence on the Bank Nifty. So momentum is the median to be sideways on both indices. Short term it is sideways. Short term also it is sideways now on both indices. It turned sideways for the Nifty today from the bear zones. Trend indicator is showing that it is still negative trend, DMI negative, bearish zones on the Nifty, but Bank Nifty managed to be just at the crossover point within the bullish zones for the trend. So here also trend wise also Bank Nifty trend looks better. VIX is 6% short up again today, 1 day ahead of the full budget, quite natural. Near to 22 is the VIX level. That's India VIX has set that. Black already is 22.6. IVP is at risen up to 86.29. Right. So the 15-21 range is broken now. It is the 21 to 24 is where it is hovering around for the last several days. Right, whether it will fall back to this previous range of 21 to 15 will come after the budget. So very high volatile levels ahead of the budget. Something to be cautious about. Open interest data, look at the data, 16,000. It's quite far from where it is. So it's near 17,350, and 16,000 is more than 1,300 points away. That's the fear in the market. So 16,000 is where the highest put rating is here, and after that 16,500 also is where the highest put rating is there. Similarly 18,500, how many points away? 1,500 points away is where the, and the expiry is just 3 days again. This Thursday is the expiry, Feb 3rd. So 18,500 is the upside resistance. Maximum call rating is seen there. After the 18,000 also is good enough call ratings. 0.65 put call ratio is not bearish, not bullish also. Short covering is in the futures. We'll come to that later. Bank Nifty 38,000, and 40,000 is where the highest put and the highest call is there. 36,500 has got good put rating also. 39,500 also put rating. 0.64 also again put call ratio is not that bearish. It's not bullish also. All right. Futures open interest data is showing there is a short covering that happened today in the futures line, and long will run easily on the Bank Nifty. So short covering is also bullish because people are thinking of going to take long positions. All right. But there's clear volatility and clear fear of the price fluctuations. That's why the sellers have put it given a range of 16,000 and 18,500. That's 2,500 points of range for the open interest. Very rarely, on a we have such an open interest to start a Tuesday in a weekly expiry. We talk about weekly expiry, right? That's the open interest analysis. Look at the heat map. It's green today, except for Indus Bank and Kodak Bank. These are all pretty green. All sectors performed today good except for chemicals. Sectoral performance is 2.8%. So basically, in a nutshell, all the sectors have, except IT, has moved the momentum from bearish zones to sideways. They become sideways now, better. But IT is still yet to retain from that. So it gapped up today, IT, and a lot of gap ups happened. Reality gapped up, FMCG gapped up, pharma gapped up, right? And IT also gapped up 3% nearly, right? FMCG 0.7 flat. So the momentum is sideways for all and bearish for IT. So till the momentum is catch up, there's no top-down approach of picking the stock, picking the sector, and then choosing the stock. Right? Doesn't work. So we'll have to wait for the momentum catch up. Institutional participation was pathetic in the foreign institution side. Big selling was happening last 3, 4, 5, 6, 7 days continuously, making January 37,720 crores of selling. Big DIs are supporting and buying. Today also selling might have happened from the Fyers when the Bank Nifty dipped, that made the dip in the first half. But heavy buying might have come in from the domestic institutions, what I was seeing. That is no doubt. We'll have to check that later. Dollar index is consolidating after 97 kind of levels, so it's dollar is gaining strength. But USD INR has faced the resistance side of the budget and it's lost the momentum. and seems to be closing red, and seems to be falling back to the support zone again after hitting the 75 plus levels, which is a relief, you can say. But crude cooled off today, but still at the 86 kind of levels, not good. Gold has fallen down, and then after failing another fifth or sixth attempts of reaching the channel top, and then finally taking the support, and then today also it was kind of consolidation. US markets are showing green Friday after a big correction that happened across. So today is tomorrow mornings you'll have to see, well, if there is falling back to that major correction once again or not. You'll have to check. So if it is consolidating or showing some symbols of sustaining that big support level where it is, then there is no harm. Otherwise, that if it breaks the big support in the US support level that is seen and tested multiple times in all of the US major indices, that's broken, then you have trouble in the market, regardless of the budget. State Bank of India is a pick for the next, it's a public sector bank and good volumes, good momentum, right? Spiking up and good trend, and it is well within a channel midway. This long risk reward is good. Right? Keep a stop loss at this. Is a swing or a positional trade rather. Uh, Keep stop loss at this neckline level where it had earlier broken out. Right. Risk reward may not be that attractive if you put that wide stop loss. Right. If you are not aggressive, then you could put a risk reward with the entry, or alert candle low. Right, for swing trades. For positional, you just have to take the risk of that. ATPC is another one. It's also well within a channel, and momentum is up, volumes are good, and trend is also good at DX. Right, so NTPC and State Bank of the two picks for the day. Wrap up tomorrow. Stay out of it if you can. Is what my call is. I'm slightly mildly bullish because of the chart patterns, price support levels, trend crossover that happened in the momentum, and the trend indicators. Institutional selling, basically closing green, gapping up, all sectors recovering from bearishness, sideways, and all that. And the US market correction, as good correction has happened, and now it may be at a support level and it may be bouncing back. And Bollinger Bands is showing that BANKNIFTY is showing very good strength, closing above the 20 DMA. So all factors that gives me a feel that it may be a mild bullish view for tomorrow. But while before the event happens, do not take the trade. After the event, you may risk to take if you could catch the trend and identify where if a trend is getting formed using trend indicators, right? So stay if you can is the best strategy. Weeks level above 23, you have to remember that that's crazy levels. You may not be able to. It's like catching a falling knife. You may not be able to make quick judgments before you act on it. Your stop loss might have got triggered, or you're out of the game, or you lost your capital. So protect your capital is the game tomorrow, and enter only after the event is over, if at all you have to, when the trend is clear. Otherwise, if you're already entered, then I believe you must have done the hedged strategies, or covered calls, or you know uh, hedge portions like spreads or whatever with defined risks. Stay until the defined risks are met, and then get out of it whatever happens, right? So that's the view that is there. Happy trading and happy learning. Good luck for budget trading if you are doing that, and stay cautious slightly. And happy trading, happy learning. If you're not subscribed, consider subscribing and liking and sharing this. We have very few subscriptions. Hope to get your help on this regard. Thanks. Bye.